Hello students, in this video we will see the solution of question number 36. Okay, so as you can see in the question that you need to prepare only a realization account, Ria's loan account and Dia's loan account. So this question is going to be very simple and short. Okay, so first of all what we need to do is that we need to extract the figures from balance sheet to the realization account. Okay, it is actually the transfer of the items that are already there. So let us transfer the amounts first of all. Okay, so let us start with okay, asset column, as I usually do start from asset. Okay, so you know that cash will not appear in the realization account. Okay, so instead of that we will start with debtors. Okay, so right here to debtors 42,000. Okay, so the provision related to this will be transferred to the liabilities sorry, to the credit side of realization account. Okay, so liabilities are your provision. Okay, we already know that both provision and reserves are your liabilities. So the liabilities will appear in the credit side of your realization account. Okay, so and one mistake that I have committed here is I have written two bank account. Okay, normally what happens is that we start sorry we whatever is the procedure. Okay, in terms of partnership accounting, normally the transactions are from the bank account. So in the question cash is given, so please rectify that. Okay, so I hope yes, here also you can see this in fact the payment of loan account should be transferred from the from this bank account only, but we have cash, so you can choose any one. Okay, there is no issue with that. Anyway, so let us start. uh, and again the assets realized amount will be transferred from the bank account only. Okay, so you can do cash also or bank also, but normally it is from the bank account. Okay, so first will this debtors will come here. Okay, towards the debit side of your realization account. Okay, after that this provision which is associated with the debtors will appear in the credit side of your realization account. Okay, after that we have stock. Okay, then investments. Okay, then plant and machinery. Okay, and you can see here there is Dia's loan also. Okay, so as I previously mentioned that partner's loan. Okay, partner's personal loan. Okay, if there is any form of loan um, provided to the partner or provided by the partner, which is a private loan, should be treated separately by preparing their separate loan accounts. Okay, so this particular loan, this Dia's loan, was given by the firm, okay, to Dia. Okay, so we will not include this in the realization account. And let us move on to liabilities section. Okay, so till now we have written here these items: debtors, stock, investments, plants and machinery. Okay, so 1, 2, 3, 4 items. Okay, now let us move on to the liabilities section. Then we have sundry creditors here. Okay, 60,000. Okay, again Ria's loan. Now this loan is provided by Ria. Okay, Dia's loan was provided to Dia. Okay, it was provided by the firm. Okay, but here in this case, Ria's loan, this loan is provided by Ria. Okay, so this Dia's loan was given. Okay, and this Ria's loan was taken by the firm. Okay, so now this sundry creditors will come 60,000. Okay, Ria's loan will not appear. General reserve, it is an accumulated profit, so it will not appear. Now after that we have investment fluctuation reserve. Okay, and this provision for doubtful debts which we extracted from the asset column. Okay, now we have written three items here. Okay, so after that you move on to the adjustments. Okay, so now what is written here: the creditors were paid off by giving them the plant and machinery at 10% less than the book value and the balance in cash. So what is written here? First of all, it is mentioned that this creditors, okay, 60,000 creditors were paid by giving them plant and machinery. Okay, so plant and machinery. Okay, so it was at 10%. Okay, so now let me show you with the calculator here. Okay, just wait. I should have done this calculation before only. Okay, anyway, so 10% of 39,000 will be 3,900. Okay, we know that. So into this 10%, what is happening here? Standard. Okay, yeah, it is a standard calculation only. Let us go to scientific. Okay, so 39,000 into 10. Where is percentage? We don't have divided by 100. Okay, so this one is going to be 3,900. Okay, 10% of 39,000 will be 3,900. So now from 39,000, if we subtract 3,900, how much it will be? It will be 35,100. Okay, so now plant and machinery. Okay, this plant and machinery which was here 39,000 will now be used to pay the debtors. Okay, at a at a 10% discount. Okay, amounting will be 35,100. Okay, now the total amount of creditors is 60,000 minus 35100. How much is the amount? How much is the leftover? 24,900. And now this 24,900 will be paid to creditors. Okay, again I'm repeating, this plants and machinery are of amount 39,000. Okay, its 10% will be 3,900. So what is the left amount? 35,100. Now plant and machinery were given to creditors at a value of 35,100. Okay, as a part payment, and creditors are amounting to be 60,000. Okay, so plant and machinery as given for the part payment. Now the remaining amount is 24,900. Okay, this will be paid to creditors in cash. Okay, so that's it. So this is how we do the calculation of that. Okay, so 24,900 is the amount. And remember, if any asset, is used as a payment to pay off uh, our liability, its entry will not be there. Okay, we will not pass the entry for that. Okay, we are making the payment to creditors by giving plant and machinery, but we will not pass the entry for that. Okay, its entry will not be passed. Okay, now after that we have a RIA's loan will be paid afterwards. Okay, don't worry about it. Now the debtors realized 10% less of the amount due from them. So the debtors were how much? 42,000. Okay, its 10% will be 4,200. Now subtract 4,200 from this amount. How much we will get? We will get 37,800. Okay, and stock was taken over by RIA at 7,000. So RIA's capital account will be credited here. Okay, by 7,000. Okay, now after that we have investments realized 80% of the book value. Now investments was this 18,000, so its 80% will be 14,000 for this 400. So now the total will be 52,200. Okay, after that we have realization expenses paid by DIA. So DIA is making the payment of realization expenses. Okay, so debtors, they are realized. Stock, it is taken over by RIA. Investments, we are realizing. Okay, plant and machinery, they were used for the payment of sundry creditors. Okay, and sundry creditors we have already paid here. Okay, and we don't have to make any payment for this IFR and this provision for doubtful debts. Okay, because we don't have to pay it actually, because it's a liability. It is an liability which is created internally. Okay, so we don't have to make the payment for the same. So after writing all these amounts, okay, 60,000, 2,000, 6,000, okay, this 52,200, and this 7,000, okay, 42,000, 12,000, 18,000, 39,000, 24,900. After that we have 600 also. Okay, yeah. Now let us come to the point number 2. Ria's loan was paid off with interest of rupees 500. Now we have to make the payment to Ria uh, of rupees 500 extra as interest on her loan. So that is the firm's expenditure. So whenever the firm makes expenditure, it comes to the debit side of your realization account. As per the golden rule of nominal account, debit all expenses and losses. So all expenses and losses, debit. So this 500 which we are making the payment to Ria as interest on her loan is the expense to the firm. So this will be again recorded towards the debit side. Okay, now after uh, we calculate this total, okay, this debit side total will be more, 1,37,000. Okay, then we have to find the difference between these two amounts. Okay, the difference will be 9,800, and this will appear in the credit side, so which is your loss on realization. And Dia and Ria, they both are equal partners, so the losses will be shared equally. Okay, so now this is your realization account. Now let us move on to Ria's loan account. Now, Ria's loan account, this loan was uh, given by Ria to the firm. Okay, so it is our liability. Okay, it is an internal liability. So Ria's loan was how much? 15,000. Okay, so we have to make the payment to Ria. So you can write here by realization account. Okay, by realization account bracket interest. Okay, by realization account bracket interest. Okay, and the amount will be 500. Okay, so please make this correction here, by realization account bracket interest. So 500. Okay, and the total amount will be paid off to Ria. Okay, and this is your Ria's loan account. So after this, we prepare Dia's loan account. Now, Dia's loan was given by the firm to Ria. So it is not liability, but it is your asset. Okay. So this will be your 2000. Okay, towards the debit side. This Ria's loan will have debit balance, whereas Ria's loan was credit balance. Okay, because it was a liability, and this is not liability, but it is an asset. Okay, so Dia's loan will have debit balance 2000, and this will be paid by Dia to firm. So this will be the payment. Okay, so this is your uh, loan accounts of the partners. So this much